Talk us through this data announcement. US, let's start things off. Wednesday, we had CPI.
Yeah, so we'll rip through the US first. As you said, the CPI was on Wednesday. Now, I'll pull up a chart of US inflation. Now, you can still see there it is downtrending. The figure for the year-on-year was 6.4%, which is down from 6.5%, which you can see is last month. And that's the 7th consecutive month now that inflation in the US has been downtrending.
So just for our clients, just put it to length for idiots like me that probably can't understand it. If this keeps going down, that is a good thing. It is showing that interest rates are working because they've been hiked and inflation is coming down. So this is inflation. It means things are getting better. That graph is going in the right direction. Is that right?
Exactly right. So we are still slowing. The pace at which we're slowing down, though, is also lessening. And we did fall short of estimate. So the estimate, the consensus on the street was 6.2%, and it was 6.4%. So it was slightly above expectations, but as we discussed earlier,
so we thought the street over in the US, they thought that inflation was going to be 6.2% year on year, and it was 6.4%. So it was still down from what it was last month, but it wasn't down as much.
Exactly right. So that's the way to look at it. People expected it to fall from 6.5 to 6.2. It only fell to 6.4. So it was still above expectations, but as we discussed Wednesday morning when we were up quite early, the markets were down. The Dow Jones was down quite heavily. But we did see quite a bit of optimism and a lot of buying pressure accelerating us into the close.
That last sort of hour of the before the close.
They were all. I know all indexes were red. The Nasdaq closed nearly up 1%. The S&P, I believe, about 0.4, and the Dow Jones flat, just in the green actually. So fair bit of buying pressure. Still a bit of optimism, even though the inflation figure was more than expected. I still think the fact that it is slowing is causing, I guess, a lot of optimism amongst investors, which was quite positive on the broad base with the CPI data release.
Perfect. So let's go into our next one. That was on Thursday morning, and that was retail sales over in the US. What are those, and what happened to them?
Correct. So retail sales in the US, and again, there's always two ways to look at things now. Retail sales in the US rose 3% in January, which is a very big increase for that. That is twice that of expectations. And
so that means, in a nutshell, people are buying more. They're buying more stuff.
Correct,
is that right?
spending more. Exactly right. So I guess a big driver of that was the fact that jobs growth in the US was quite substantial. The last jobs figure we got was very substantial. So a lot more people are getting jobs and earning more money. Retail sales was up. Now again, there's two sides to that. It's very positive for economic growth and economic stimulation. But with regards to what you were saying before, with interest rate increases taking effect on the economy, one of the side effects of that is retail sales should be contracting. So there's a really interesting contradiction from some of these economic figures out of the US. CPI has been quite positive. Retail sales in the last couple of months has been positive. We're still declines in November and December, but now it's up in January. So again, we're still sort of juggling data, some positive, some negative with regards to the fight against inflation. But for January, a pretty big increase in retail sales in the US.